Welcome. In today's video, we're diving into practical steps you can take to quickly improve your credit score. Whether you're planning to buy a home, get a new car, or simply want better financial options, understanding your credit score is the first step. Your credit score is a 3-digit number that lenders use to determine your credit worthiness. The higher your score, the more likely you are to get approved for loans and receive favorable interest rates. Let's explore how you can boost your score efficiently and see results faster than you might expect. The first actionable step is to check your credit report. You're entitled to a free credit report every year from each of the major credit bureaus. Reviewing your report helps you spot errors or fraudulent activity that could be dragging your score down. Look for incorrect personal information, unfamiliar accounts, or late payments that you know you made on time. If you find any mistakes, dispute them immediately. Correcting errors can give your score a quick boost and set the stage for further improvements. It's important to understand what factors influence your credit score. The main components include your payment history, amounts owed, length of credit history, new credit, and types of credit used. Payment history makes up the largest portion, so making payments on time is crucial. The amount you owe compared to your credit limits, known as credit utilization, also plays a significant role. By focusing on these areas, you can make targeted improvements that have the biggest impact on your score. One of the fastest ways to improve your credit score is to pay all your bills on time. Even a single late payment can significantly lower your score. Set up automatic payments or reminders to ensure you never miss a due date. If you have overdue bills, bring them current as quickly as possible. Consistent, on-time payments demonstrate reliability to lenders and can quickly start to move your score in the right direction. Another effective strategy is to reduce your credit card balances. Your credit utilization ratio, which is the amount of credit you're using compared to your total available credit, should ideally be below 30%. Paying down high balances can have a rapid and positive effect on your score. Focus on paying off cards with the highest utilization first, but try to lower balances across all your accounts if possible. Each time you apply for new credit, a hard inquiry is added to your credit report. Too many hard inquiries in a short period can lower your score. Try to limit new credit applications while you're working to improve your score. Only apply for new credit when absolutely necessary, and space out your applications to minimize the impact. If you have a good payment history, consider asking your credit card issuer for a higher credit limit. Increasing your limit while keeping your balance the same will lower your credit utilization ratio, which can quickly boost your score. Just be careful not to increase your spending after your limit is raised, as this could negate the benefits. Another quick way to improve your credit score is to become an authorized user on someone else's credit card, preferably someone with a long, positive credit history and low utilization. Their good payment habits can be reflected on your credit report, potentially giving your score a helpful boost. Make sure the card issuer reports authorized user activity to the credit bureaus. If you find any inaccuracies on your credit report, such as accounts you don't recognize or incorrect late payments, dispute them right away. You can file disputes online with each credit bureau, provide supporting documentation to back up your claim. Once the bureau investigates and corrects the error, your score can improve quickly. If you have accounts in collections, paying them off can help your credit score, especially with newer credit scoring models. Some models ignore paid collections, so settling these debts can remove their negative impact. Contact the collection agency to negotiate a payment plan if needed, and always get confirmation in writing once the debt is paid. It might seem like a good idea to close old or unused credit accounts, but this can actually hurt your score. Keeping older accounts open increases your average account age and total available credit, both of which are positive factors. Unless there's a compelling reason, such as high fees or fraud, keep those old accounts open. Having a mix of different types of credit, such as credit cards, auto loans, and mortgages, can positively impact your score. Lenders like to see that you can manage various forms of credit responsibly. However, don't open new accounts just for the sake of diversity, only take on new credit if you truly need it. Missing a payment can be costly, so setting up payment reminders is a simple yet effective way to keep your credit score healthy. Use your phone's calendar, banking apps, or email alerts to remind you of upcoming due dates. Staying organized helps prevent accidental late payments and keeps your score moving upward. Automating your payments is another great way to ensure you never miss a due date. Most banks and credit card issuers allow you to set up automatic payments for at least the minimum amount due. This not only protects your score, but also saves you time and stress each month. Keeping an eye on your credit score and report helps you spot problems early. Many banks and credit card companies offer free credit monitoring tools. By tracking your score, you can see the impact of your actions and catch any suspicious activity before it becomes a bigger issue. If you're struggling to make payments, reach out to your creditors. Many lenders are willing to work with you to set up payment plans or temporarily lower your interest rate. Proactively communicating can prevent late payments from hitting your credit report and may help you avoid collections. Balance transfer credit cards can help you pay off high-interest debt faster by moving your balance to a card with a lower or 0% introductory rate. This can help you pay down your debt more quickly and improve your credit utilization. Just be sure to read the fine print and pay off the balance before the promotional period ends. Maintaining a low credit utilization ratio is key to a healthy credit score. Try to keep your balances below 30% of your total credit limit, and, if possible, aim for even lower. Paying off your cards in full each month is the best way to keep utilization low and avoid interest charges. Credit scores typically range from 300 to 850. Scores above 700 are considered good, while scores above 800 are excellent. Knowing where you stand helps you set realistic goals and track your progress as you implement these strategies. Maxing out your credit cards can seriously hurt your score, even if you pay them off each month. Try to use only a small portion of your available credit. If you need to make a large purchase, consider spreading it across multiple cards or paying it down quickly to keep your utilization low. Opening several new credit accounts in a short period can lower your average account age and trigger multiple hard inquiries, both of which can hurt your score. Only open new accounts when necessary, and focus on managing your existing credit responsibly. If you're rebuilding credit, a secured credit card can be a helpful tool. These cards require a deposit, which acts as your credit limit. Use the card responsibly, make on-time payments, and your positive activity will be reported to the credit bureaus, helping you build or repair your score. Payday loans may seem like a quick fix, but they often come with extremely high interest rates and can lead to a cycle of debt. They don't help your credit score and can even make your financial situation worse. Look for safer alternatives, such as personal loans from a bank or credit union. Identity theft can wreak havoc on your credit score. Regularly check your credit report for unfamiliar accounts or suspicious activity. If you spot anything unusual, act quickly by contacting the credit bureaus and placing a fraud alert on your file. Not all credit checks affect your score. Soft inquiries, like checking your own credit or pre-approval offers, don't impact your score. Hard inquiries, such as applying for a loan or new credit card, can lower your score temporarily. Knowing the difference helps you make smarter decisions. If you have a history of on-time payments but a recent late payment, consider asking your lender for a goodwill adjustment. Sometimes, lenders will remove a late payment from your credit report as a gesture of goodwill, especially if you have a strong payment record. Responsible credit use is the foundation of a good score. Only borrow what you can afford to repay, make payments on time, and avoid unnecessary debt. Over time, these habits will help you build a strong credit profile and keep your score high. Co-signing a loan makes you responsible for someone else's debt. If they miss payments, your credit score could suffer. Only co-sign if you're confident in the other person's ability to repay and you're willing to take on the risk. Paying only the minimum on your credit cards can keep you in debt longer and increase your credit utilization. Whenever possible, pay more than the minimum to reduce your balance faster and improve your score. Unpaid medical bills can end up in collections and hurt your credit score. Always review your medical bills for accuracy and work out payment plans with providers if needed. Many providers are willing to negotiate or offer assistance programs. Credit builder loans are designed to help you establish or rebuild credit. The lender holds the loan amount in a savings account while you make payments. Once the loan is paid off, you get the money, and your positive payment history is reported to the credit bureaus. Credit utilization is the percentage of your available credit that you're using. It's one of the most important factors in your credit score. Keeping your utilization low shows lenders that you're not overextended and can manage credit responsibly. Even small balances on credit cards can affect your utilization ratio. Pay off small balances to keep your utilization as low as possible. This simple step can make a noticeable difference in your score. After paying off a credit card, it's tempting to close the account. However, keeping it open increases your total available credit and helps your utilization ratio. Unless the card has high fees, consider leaving it open to benefit your score. Improving your credit score is a process that takes time and consistency. By following these steps and maintaining good habits, you'll see steady progress. Remember, there are no overnight fixes, but your efforts will pay off in the long run. Knowledge is power when it comes to credit. Take time to learn about how credit works, what affects your score, and how to protect yourself from common pitfalls. The more you know, the better equipped you'll be to make smart financial decisions. If you're overwhelmed or unsure where to start, consider seeking help from a certified credit counselor. These professionals can help you create a personalized plan to improve your credit and manage debt. Make sure to choose a reputable, nonprofit organization. Set aside time each month to review your credit report and score. Tracking your progress helps you stay motivated and allows you to adjust your strategy if needed. Celebrate your improvements. No matter how small, they all add up over time. Unfortunately, there are many scams that promise to fix your credit overnight for a fee. Be cautious of any company that guarantees quick results or asks for payment upfront. Improving your credit takes time, and legitimate help is available for free or at a low cost. Bankruptcy can have a severe and long-lasting impact on your credit score. It should only be considered as a last resort. If you're facing bankruptcy, consult with a financial advisor to explore all your options and understand the consequences. If you're planning a major purchase, such as a home or car, start improving your credit well in advance. Lenders will review your credit history, so having a higher score can save you thousands in interest. Give yourself several months to implement these strategies before applying. Credit laws, such as the Fair Credit Reporting Act, protect your rights as a consumer. Stay informed about your rights and responsibilities. Knowing the law helps you spot errors, dispute inaccuracies, and avoid unfair practices. There are many apps and online tools designed to help you manage your credit. Use technology to track your spending, set payment reminders, and monitor your credit score. These tools make it easier to stay on top of your finances and reach your credit goals. Improving your credit score is a journey, and every step forward is worth celebrating. Recognize your achievements, no matter how small, and use them as motivation to keep going. With patience and persistence, you'll reach your credit goals. To wrap up, improving your credit score quickly is possible with the right strategies and consistent effort. Start by checking your credit report, paying bills on time, reducing your balances, and using credit responsibly. Remember, every positive action counts. Stay committed, and you'll see your score rise over time, opening doors to better financial opportunities.